If you're a real estate agent or realtor, listen up. This video is for you. I'm going to discuss what business entity you should form, why you should form it, when to form it, and how to do so. Specifically, I'm going to discuss why the PA, the Professional Association, is no longer advised for new realtors. What is an LLC? What is an S corporation? All that and more coming up in this video. If you're new here, my name is Navi Miraj. I'm a certified public accountant whose firm solely focuses on real estate professionals. That would be you, the real estate agent, the realtor, the broker, etc. If you wish to replay this video at a later time, you can find this video as well as all of my other videos in my library at navimirajcpa.com. But again, the reason for this video is to educate you on what type of legal entity type structure is best for you or may be best for you, and how that structure is treated from a tax perspective. That may not make much sense, but let me get into the details here and kind of lay the foundation, and it will sort of clear up what I mean by that. So on this board, I have written across the top the different legal entity types. And across the bottom, I've written the different types of ways these entity types can be taxed, okay? So the point I want to make here by having these two groups is that when you form a business, you are making both a legal decision and you're making a tax decision. Let me also touch on what the colors represent. So in green color, you will see how that entity type is treated by default from a tax perspective. And the blue color signifies how that entity type may be treated from a tax perspective if you elect to do so. And I'll touch on that again here in a moment. I'm just laying the foundation for right now. Real quick about legal entity types. I am a CPA, as I mentioned a moment ago, so I can speak upon the different tax classifications and how they're treated. Technically, I'm not a business attorney. However, I have consulted with business attorneys across the nation, and I'm pretty sure they would agree with what I'm about to tell you. However, this is not legal advice, and if you'd like to consult with an attorney, then I certainly recommend that you do so. Let's first touch on, this first entity here, the sole proprietorship. So if you're a realtor and you pass your real estate license exam and you choose what brokerage you want to work with and you make a transaction, you're operating as a sole proprietorship. You didn't fill out a form to do so. You're what the IRS calls an independent contractor. You're not an employee of the brokerage. And at the end of the year, instead of a W-2, you will receive a 1099 form. So you can conduct business as a sole proprietor. The downside with doing that, and this applies to realtors as well as other businesses, is you don't have what's called limited liability protection. So if a client wants to sue you, let's say your name is John Doe, and you're operating as a sole proprietor, then although you were conducting business with them as John Doe, the realtor, if that client sues you, it's possible that the client may be able to go after your personal assets that you own as John Doe, the individual. So perhaps your personal bank account, or your assets such as your car, your home, or what have you. When you operate as any of these entities on the right-hand side, and I'll explain what these are in a moment, you'll now have limited liability protection. And if your client sues you, you may receive limited liability protection. And I use the word may here because you still want to make sure that you're doing the appropriate things to get the protection from what is referred to as the corporate veil. So, this is not a legal video, but just quickly off the top of my head, some things that you want to make sure you don't want to do is you don't want to commingle funds between your personal and business account. You want to make sure you use, your business name on all your marketing materials, including your business card. You want to make sure that you have not just the articles that you received when you formed your business entity, but also bylaws drawn up or an operating agreement if you choose to operate as an LLC, that you have meeting minutes or you record meeting minutes when you have business discussions. And I know that might sound silly if you are a realtor because typically it's just one person, but yes, you would record meeting minutes with conversations that are taking place between the business and then you as the owner of that business. All right, so that's the legal part of it, right? These entities provide you limited liability protection. The sole proprietorship does not. Now, let's talk about the tax classifications. That's likely more the reason why you're watching this video. So let's discuss them by talking about the default tax structure of each of these entities. So as I mentioned, if you operate as a sole proprietor, which by the way, you could go into your bank and say, hey, I'm a realtor, I want to open a business account, and you can do so without forming a business entity. They will establish a business account for you. It, by default, and really the only way it's taxed, is as a sole proprietorship. It's also a tax classification. And you will do so by filing your Form 1040, your individual tax return. But what will be different is that you will fill out Schedule C, or perhaps your tax accountant will fill out Schedule C and include it with your Form 1040. The point I'm trying to drive home here is that there's not a separate set of tax documents that you or your tax preparer is drafting for you when you file your individual tax return. It's just an additional schedule that's attached to your Form 1040. And this tax return, as you probably are well aware of, is typically needs to be filed by April 15th of the year. Now, the single member LLC, and you also see me putting PLLC here. So let's talk about this. So SM means that it's a single member. The owners of an LLC are called members, and the PLLC is available in the majority of states out there. So why would you form a PLLC instead of an LLC? Well, folks that have a license that's filed with the state should be forming a professional limited liability company rather than a, plain vanilla, if you will, limited liability company. So that would be, of course, you, the real estate agent who has a license with the state. If the PLLC is not available in your state, then by all means, you would form the plain vanilla LLC. Now, how is this entity type taxed? By default, it's taxed in the exact same manner as the sole proprietorship. So again, the point I want to drive home here is that there's no difference between how the sole proprietorship and the single member PLLC is taxed by default. They are both taxed in the same exact manner, and your tax return is also due on March 15th. All right, the multi-member LLC, same thing applies. You can have a multi-member PLLC as well. So this is when you have two or more owners in an LLC. It is extremely rare that this entity type is recommended for real estate professionals. I can't think of a single example of when I would tell a real estate agent whose business is to sell homes, whether it be commercial property or not, to form this entity type for that type of business. There is a place for this entity type, but it's not in this discussion that we're having here, and I'll touch on that here in a moment. So I would avoid the multi-member LLC. Now, this might be controversial. I expect that a lot of you have seen this professional association or this PA acronym from some of the top producers in your office, and you're not quite sure what it is. Well, basically, just like when you're a professional who holds a license and you form an LLC, you're forming a PLLC, that's what the C corporation is. So you might be, a C corporation is like the Amazons of the world. And if you hold a license, then you would form a professional association. But if you do so, what is the default tax classification? The default tax classification is a C corporation. So you'll file Form 1120, and that tax return is due March 15th, not April 15th, like in this scenario here. So why am I mentioning that? Well, you might be familiar with the term double taxation. I don't want my clients to receive double taxation. This entity type is typically reserved for businesses that want to raise capital and maybe go public one day. It's for your larger corporations. Okay, so how could you be taxed, right? You could make an election, which is, remember, what the blue line signifies, to be taxed as an S corporation. And let's briefly talk about what this is. So the S corporation, if you notice, I did not write it at the top of the board here. That's because if you go to your state and you try to form an S corporation, they're going to say, well, that's not an entity type that we established. The reason for that is a tax classification. So you first have to have an LLC and then fill out a form with the IRS to be treated this way for tax purposes. Same thing with the multi-member LLC. It can be treated this way for tax purposes. Same thing for the PA. It can be treated as an S corporation for tax purposes. So historically, that is what was done in the real estate profession. You would form this professional association, and then immediately, to avoid the double taxation, you would have it treated as an S corporation for tax purposes. The reason why I'm kind of suggesting that that's an old school mentality and not appropriate for especially you new realtors is you may prematurely make this S corp election. Well, what do I mean by that? What I mean by that is when you form an S corporation, you now have a separate set of tax documents that need to be prepared. Typically, you would ask an accountant to do that for you, and they may charge you anywhere from, if they're competent and they're good at what they do, anywhere from at least $400, if not $1,200. It could be in that spectrum, right? So that's an additional cost you're now incurring when you didn't need to. Also, when you're an S corporation, the IRS says you need to take a quote-unquote reasonable salary, and so you need to hire a payroll company to handle your payroll. It's not as simple as writing yourself a check. There are other responsibilities that you have when you form an S corporation. So, the reason why the PAs were so popular is that, these have been available since like the 1800s. It's been written in our law that you can form these. The LLCs and the PLLCs are relatively new. I think they were established sometime in the 1970s, and they really blew up in popularity, I would say, sometimes in the early 2000s. And so this is not a personal recommendation for you. I would recommend that you have a conversation with either myself or who your trusted advisor is and let them kind of navigate this discussion for you. But what I'm about to tell you holds true for, I would say, 99% of the real estate agents I talk to, and that is they will form a PLLC if it's available in their state. They will, if not available in their state, they will form an LLC, and they will continue to be taxed as a sole proprietorship until that business has about $40,000 or so in net profit. So let me clarify what I mean by that for a second. So you have your commissions that you receive via your 1099 for the year that your brokerage sends you, and you have your expenses such as mileage. Hopefully you're taking these home office deductions, etc., advertising, and the net amount between those commissions and your expenses will leave you with your gross profit. So typically, once you hit that $40,000 mark or higher in profit, that's when it makes financial sense to create the S corporation. The reason why I'm saying that is because people elect the S corporation status as a tax planning strategy. This S corporation can save you thousands of dollars in taxes. And so just as some rough numbers, I have a whole nother video that I'll create on this topic, but the S corporation, if you're clearing about $40,000 or so, probably save you close to $3,000 in self-employment taxes. And as you earn more and more income, it'll save you more and more money. So again, in a ballpark figure, if you maybe have $80,000 in net profit, you're probably saving close to $7,500 or so in self-employment taxes. So it's a significant tax saving. So this is why so many folks are transitioning from the PA to the PLLC, is because there's flexibility here, right? This is very rigid. You have to do this, which is double taxation, or you can do an S corp, but you may not be ready to do this yet. The PLLC says, hey, I can still be treated as a sole proprietorship for tax purposes, and when the time is right, I can make this S corp election. Now, when do you want to form the LLC or the PLLC if that's what you choose to do? You want to do that in the year that you forecast that you're going to be clearing $40,000 or so in profit from your business. Now, you're probably like me and you can't see the future, so you don't know what year that's really going to occur. For a lot of the realtors I talk to, that happens right out of the gate in year one. And so the point I want to drive home here is that you'll notice that for the sole proprietorship, there's no way to get treated as an S corporation, right? There's no blue arrow here. So you need to form your LLC so that it's treated this way, and then when the time is right, you can make the S corp election. If you're into the year, let's say it's September of your tax year, and that's when you hit the $40,000 mark or higher, and you want to try to employ this strategy, well, it's too late, because you were a sole proprietorship, and I can't do that for you, right? So think of it this way: the PLLC or the LLC is sort of buying your ticket into the S corporation club where everyone else wants to be. And if you don't buy that ticket, you can't get into this very valuable club. Let me touch for a moment on when this tax return is due. I want to make sure you don't make this mistake. So these three entity types, sorry, my mistake, these three tax classifications, if you create one of these, your tax return is not due on April 15th. It's due on March 15th, all right? The reason why I'm stressing that is because, there is a late penalty if you file your return late for these entity types. And it's about $200 per month per owner of the LLC. So, if you made the mistake, for example, and you formed a multi-member LLC, and you were even just 1 month late, that's $400 in late fee. So I wanted to make sure you knew that these entities are filed on March 15th, and they're a separate set of tax documents than if you're treated as a sole proprietorship whose tax return is due April 15th. Now, when, I kind of said this was never for you, but I do want to say that there are times where the multi-member LLC is something you would want to do. And that's typically when you as a real estate agent also own some real estate investment property, right? I don't want you in an S corporation if you are getting passive income through a rental property that you own. That's typically just going to stay in the LLC if you own it by yourself, or if you have a partner involved in it, in this sort of default status and taxed this way or this way. I don't want you to elect S corporation status for that entity, because then you'll have to pay self-employment tax on it. So how do you form these entity types? Well, a great resource for you that has a lot of education on this topic is fileyourbusiness.com. I'll add a description, I'll add a link in the description below. Full disclosure, I am affiliated with the company, but that website about 80% of it is educational in nature. So not only will it touch on the topics I discussed here, but it will also touch on, what is a registered agent and why do you need to have one? What are the annual reporting requirements for your LLC or corporation, and so forth and so on. So if you found this video helpful, please do like and subscribe. And also, if you have a question or a comment, please leave it in the comment section below, and I'll see you in the next video. Thanks.